Ladies and gentlemen, welcome back to another video, and in today's video I'm going to be showing you guys how you can potentially make $100 or even more than $100 day trading cryptocurrencies during the bear market. Now this tutorial is going to be very beginner friendly because we're only going to be using 5 TradingView indicators that are super easy to learn, and I'm going to be teaching you guys how to use them today. Make sure to leave a like, that's all I ask in exchange for this information. Then subscribe if you haven't already, because I upload bangers almost every day talking about daily TA and crypto news and a bunch of other stuff. So I'm Crypto Kid, and let's jump into the tutorial right away. So these are the tools that you need to be doing this challenge, right? So essentially I use 5 different, well, actually 3 different stuff should be easy for this tutorial. So the first thing that you're going to be needing is obviously TradingView. Now TradingView is awesome because this is where I conduct all of my technical analysis, which you're going to be using to potentially make $100 day trading per day. Or even if it's not daily, you can swing trade and do this weekly, monthly, or you can even position trade if this is your hobby, right? So, but again, this is good to note. Nothing in this video is financial advice at all. It's only my opinion only, and what I personally, recommend, and this is how I started doing it. So this is everything I'm going to show you is how I started day trading, and then learn to do technical analysis. So, you can just use this as, a source of your learning and do your own research as always. But let's get back, right? So, TradingView is what I use to do technical analysis, and I use various different charting softwares, and I think TradingView is the best one. So the first step that you need to do is sign up to TradingView. Now there's different plans that you have. The first initial demo plan that you have is pretty bad because you only have like 1 or 2 indicators that you need to use. However, what I recommend you guys using for this when you're first starting out is the Pro subscription, right? And it's 12.95 cents per month, and I think it is a banger deal. I currently use the Pro Plus subscription, but you don't really need it, right? I upgraded to this after like 8 months, 9 months of learning and using. Then I upgraded to Pro Plus because I use more indicators, etc. I don't think anyone needs premium other than if you're a super professional and you're doing institution grade trading where you need multiple screens, etc. But I think Pro Plus is amazing, but to start off I would use the Pro subscription. Also, you can use the link in my description and get up to $30 to put towards your new plan, which is awesome because again, a plan costs 12.95 cents, and you can basically get almost 2 months for free if you use my link to TradingView in the description below. So I'd appreciate that a lot. Again, would be awesome for you as well. So again, this is your first step, right? Get TradingView, sign up to TradingView. Now, these are the 5 indicators that I will be using for this $100 trading challenge. Now, these are the ones that I like to use. Firstly, the EMA ribbon. Now, the EMA ribbon is awesome because it is a combination of different moving averages all in one indicator, right? It has the 20, 25, 30, 35, 40, up to 55 moving averages. And this is awesome because normally you would have to, input each moving average as a different indicator. This here combines all of it for you and has very nice colors to visualize it for you. And this is how I would use the EMA ribbons, right? I would use it to see if the price is breaking out of the EMA ribbons or if it's staying under them. So for example, over here, I had a good example on the daily chart for Bitcoin. And by the way, I like to use Bitcoin US dollar on Bitstamp. I think that's the best one, the best ticker that you can use. So over here, you would go to BTC USD, and here I would select Bitstamp. So Bitstamp like so, once you've chosen crypto, and boom, this is the one that I use. So here is a good example for the EMA ribbons, right? Over here, you can see that we retested the EMA ribbons. However, we failed to break above the EMA ribbons. Therefore, we trend lower. And again, we retest and boom, go to the downside. However, this is also very nice. Whenever the EMA ribbons fully cross, like over here, it's a very nice place to either go long or short, because if the EMA ribbons reverse to the upside, that means we're starting a uptrend, right? And over here, perfectly, if you had opened a long position whenever they reverse, like over here, so at the close of this candle, for example, you would have made up to around 19% without leverage on Bitcoin when the next time the EMA ribbons reverse. So this is a very nice indicator overall to see where your trend's at and to trade the whenever they cross up or down. So that's awesome, right? That's why I love to use it. The second one I use is the Bollinger Bands. Now, the Bollinger Bands are famous for their Bollinger Band squeezes. So I'm going to show you one right now, a very nice squeeze that happened before. So this is the one that I like to use, right? And again, for trading, right, the reason why I have 5 different indicators is because each indicator can show different things, right? And you can really understand what is the best position to trade when you use all of them at once and you collect the data all at once, right? So over here, you can see that I use chart formation. So I use this bull flag right over here. So you can, bear flag. So you can clearly see that we go down, we form this bear flag, and potentially we can break to the downside. However, we don't know for certain. This is where the indicators and oscillators come into play. So over here, if I get rid of this EMA ribbon, we can see that the Bollinger Band squeeze. And whenever the Bollinger Band squeeze, we know that there's going to be either a drastic movement to the upside or to the downside. We don't know for sure, right? But this is what the Bollinger Band squeezes tell us, right? So over here, we know there's going to be a significant price movement to the downside, right? Or upside. We know there's a bear flag, so it's most probably going to move to the downside. And using the EMA ribbons, we can see that we retest below, we retest, and then we go below the EMA ribbons. So we know it's potentially going to go and break to the downside. Then we just take the height of this bear flag, put it below, and see that our take profit target is around $20,300. And boom, if you were to have taken this trade, you would have made 27% unleveraged on Bitcoin. And that's crazy. That is literally by only using 2 indicators and a chart pattern. That's it. It's that simple. And when you're trading, right, personally, again, not financial advice, not trading advice at all. I'm just sharing what I do and what I think is best, right, for when starting out. When you're trading, right, even at a professional level, you do not need a bunch of different indicators, right? As you can see perfectly, just 2 indicators can make you so much money. So you don't really need multiple different indicators. But over here, right, so this is the 2 indicators that I use, EMA ribbon and Bollinger Bands. Okay, so now if we go into our oscillators, these are the ones that I like to use, the RSI, the stochastic, and the squeeze mob. So first of all, I want to change the settings of the RSI, so we don't need the RSI-based EMA. I personally don't use it. I'm going to change this to yellow and make it a bit thicker so it's more visible. And what I'm going to do is I'm going to combine all of them into one. Now I do this because if you're trading on mobile, it's very hard to see exactly the price and the oscillators at the same time. So once you do this, you can have an overview of both the price and the oscillators in one go. So now I'm going to quickly explain you what the RSI is, the squeeze mob is, and the stochastic is very, very nicely. Okay, so first of all, let's look at the RSI. Now the RSI basically shows the overall trend, and how to use the RSI is basically whenever the RSI crosses below, so if it crosses this line here to the downside, it means that above 70 is overbought, okay? And whenever it crosses down, it means that the price can potentially go to the downside, right? And a place to long is whenever RSI goes from oversold into the mid-range territory. So if it does this, this is where you can potentially have a long position open, right? And again, you can combine this with all the other indicators that we're showing today. So for example, over here, if we go to the weekly chart, right? Also, this is important to note. As the time frames go higher, the more accurate the indicators and oscillators get. So using the RSI on the weekly chart will be more effective than using it on the daily chart, for instance. So over here, if we look at it here, right, the RSI comes into play exactly right here. So when the RSI went from oversold into the middle territory, we saw it right over here. So if you were to have longed it, you would have made a nice position, right? And just from the RSI alone, you could have made up to 17% essentially just with the RSI. But again, you can see here when it was oversold, right? If I get rid of this, and when we cross down from oversold, this would have been a phenomenal trade. Like over here, you would have shorted at this candle. Let's say you shorted in between these 2 candles, right? Let's be fair, and let's say you shorted on this candle, right? You would have made up to 49.25% just with the RSI. However, to get your targets, again, you need to use chart patterns and different types of oscillators, but it can be very helpful. And also you can use the RSI for different types of divergences, which you can use my other videos to learn about. And divergences are very, very important and can be very, very useful. So that's the RSI, right? The squeeze map is very nice. It's basically like the MACD indicator, but it only shows the volatility graph. So over here, you can see clear changes from green to red. And the way to use this, I like to use it when the bright green shifts into the grayish green. So when it shifts to gray, you know that price is potentially going to deduce. So right over here was literally the top of Bitcoin. And when it started to go into gray, the darker green, you saw a huge price fall like crazy, right? And it still hasn't gone into green again. So if you had shorted from that place when it started to go into gray and you close your short when it started to become green again, you would have been still in profit. The trade would still be open because we haven't simply gone into green again. So this would have been a phenomenal trade, So that's why I really like the squeeze mob as well. Now the stochastic is very, very nice for short term, right? So I like to use this on the 4 hourly, the 1 hourly, and the daily because it will show you for like immediate short term price, let's call it trend changes, right? So over here, you can see when the blue line crosses the orange line, you saw that we immediately had a fall in price, right? And you saw it here as well, when the price crossed, we had an even more significant move to the downside. So if you had shorted exactly on this candle and closed your short when we crossed to the upside over here, so it was at this candle, actually right here. So it was at the close of this candle, you would have made 4.31% unleveraged on the 4 hourly chart on Bitcoin. So that would have been insane as well. So again, TradingView with these 5 indicators can be very useful, especially if you use them all in consensus, right? So this is the first thing that you need. The second thing that you need is, of course, a place to trade your trades. Personally, if you're new, I would just paper trade, right? I would just practice until I am super profitable and can risk money that I'm not afraid to lose at all. Personally, this is what I do, right? So I'm not in a bad financial situation. I just use money that, I'm not afraid to lose at all for trading, right? Let's say that's $10, $100, $1,000, whatever, right? But I only use this money and I don't use anything more because then that's just becomes kind of gambling, right? So I personally like Bybit as a derivatives platform. I think for derivatives wise, I think Bybit is the best platform. But if you don't want something centralized and more decentralized, I really like DYDX. And this is a decentralized platform. To practice your trades, you can use the Bybit testnet. So that's testnet.bybit.com. And there you can just practice your trading and see how things go. You can use the BitGet demo platform. You can use OKX, Binance for trading as well. But I personally like Bybit at the moment for derivatives trading, and you can use my link in the description below right here to get up to a $4,000 deposit bonus, which is very nice, and 0% maker fees. And this is really awesome because in the long term, if you trade a lot, right, then this maker fee accumulates and you start to lose money for no reason, right? So if you use my link, this will be your benefit, right? And you might as well. So yeah, this is Bybit, right? A few tips that I would give is not use cross while trading. So hold on, I'm not logged in right now, but I would not use cross to trade. So I would switch this from cross to isolated, because when you use cross, if your trade goes into the negative, you're risking all of your assets on your account, basically, something like that. But if you use isolated, you're only risking the amount you put into your trade. So this is a tip that I would give for beginners to watch out. And I would watch all the tutorials on the exchanges, go on YouTube for different exchange tutorials, and try to learn as much as possible to avoid making costly mistakes. That's why paper trading is awesome, because you really understand the fully functionality of the platform. In terms of leverage, right, you can use a lot of leverage on these exchanges, but personally, I only use leverage to adjust my losses, right? So I'm using a risk management technique in all of my videos, which you can go back and watch, where I can only lose 20% per trade. And I only allocate 10% of my entire portfolio on a trade, nothing more, right? So basically, if we had opened a position right here, right? Let's say we wanted to short upon this stochastic move, right? we wanted to short exactly right here. So if we had opened a short, okay, short position. If I had shorted on this candle, right, and my take profit was over here when we crossed again, I would adjust my stop loss, let's say to the prior swing high, right? Let's find a resistance. This was a nice resistance over here. I'm actually going to move it a bit higher. So right there, we had some nice resistance over here. So let's draw a horizontal line because we see price touches here, here, and here as well. So I'd say this is a nice resistance, right? And again, I'd like to put it a bit higher because of liquidations, right? People put their stop losses higher than where people tend to put their stop losses so you don't get liquidated. But let's say I just put it above this wick right here, right? So our potential loss is 3.72%. This is not a nice trade because I like to have only 2 to 1 risk to reward. This is not really nice, but let's say if we were to have opened this trade. So 3.72% would be our loss, right? We can only lose, according to our risk management, only 20% per trade. So I would use leverage to adjust it that, you know, let's say I used, so let's say around 7x leverage. I don't know the exact figure right now, but so 7x leverage would be the maximum that I would use. That would give us 21%. So just a bit below 7x leverage. So again, that's how I would adjust my leverage and choose my leverage to, you know, don't have crazy losses, but also increase the margin that I'm trading with, right? But yeah, so that's leverage for you, and that's what I would personally do. So after you found out where you want to trade, where you're happy with, and did your own research on what place you want to trade, I personally like Bybit, and again, you can use my link here as well. Then the next thing is, right, which coins should I trade? And this is very important, right? So I personally like to only trade Bitcoin because even though trading other like altcoins, you know, there's so much more volatility, there's so much more price increases and decreases, I think Bitcoin is the best one personally because a lot of these other altcoins and, you know, these scam coins, right, they fluctuate in price from the stupidest things, right? Even Ethereum, right? Ethereum, I believe it went up 10% because of one of Vitalik's images that he posted on Twitter. So especially Dogecoin as well, Elon, etc. So these other coins are nice for buying and holding in my opinion, but for derivatives trading, I personally only like Bitcoin. But if you're into altcoins and you like risk, you can use CoinMarketCap to look at some of the altcoins that you like, and make sure to always do your own research, guys. I can't recommend this highly enough. Do your own research. Don't listen to anybody. Only listen, you know, to learn, right? For example, watching this video is one of your sources of research, but always come to your own conclusions, right? So that's what I would say, but that's pretty much it. So if you can, you know, trade nicely, learn these indicators, you can make, you know, a good sum of money. You just have to find out what type of trader you are, day trader, position trader, swing trader. But yeah, you can also hook up to these bots for you to trade for them. I can make a video about this later on, but make sure to leave in the comments if you want for me to do a video like that. And also sign up to my Telegram channel. It's completely for free. I share my trades, the videos when they come out. I share a bunch of stuff. And also don't forget to follow me on my different social platforms as well. But yeah, guys, that is it for today's video. I hope you enjoyed it. Please do make sure to leave a like and subscribe if you haven't already. And yeah, I'll see you guys in the next video then, hopefully tomorrow. So take care, guys, and bye-bye.